Joining us now with her views on the biggest challenges for the Eurozone and on the outlook for the European economy for the rest of the year is Lena Komileva, the Managing Director of G+ Economics. Lena, thank you for joining us. Let's get straight into it. Lena, what do you think are the biggest hurdles for the EU?
Well, the recent developments in the Eurozone's non-core countries, Portugal, Spain, Italy, Greece, Cyprus, show that the two critical things to the Euro's long-term survival, which are political and economic stability, remain elusive. Of course, the debate about the Euro's future integration, the future of the banking union, is very much muddled, but by the fact that at least three of the Eurozone's crisis stabilization programs, those in Portugal, Greece and Cyprus, are getting off track. Now, that really stores some turbulent political times ahead, likely after the German elections in September, in terms of renegotiation of existing bailout schemes, which could involve an extension of fresh funds from the EU, from Germany to the periphery, or some debt restructuring which could reawaken the ghost of the Eurozone crisis.
Now, do you think a banking union will really help the Eurozone? And if so, when do you think we can expect some resolution on this?
A banking union has been a very thorny issue. It is absolutely critical in the structure of the Eurozone. What we have at the moment is a monetary union with extreme banking sector fragmentation across regions, which ultimately goes against the very principle of sharing a monetary union. I think that ultimately a banking union is critical in order to separate the link between bank and sovereign default risk in order to reduce the key systemic fault line that the Eurozone crisis was born from 4 years ago. But there is also a different element, and that is that it is in the heart of a deeper fiscal integration, if you like, which has got to happen for the euro to be able to survive in its current form beyond the next 2-3 years. The reason why it has been a very thorny issue is that, let's not forget, we are really operating in the shadow of the German elections in September, and Chancellor Merkel is campaigning on the promise to German voters that German taxpayers will not be footing an extra bill, an even higher bill for the plight of its poorer borrower neighbours within the Eurozone. And at the same time, of course, within the context of the banking union, it's been resisting claims of a mutualization of regional claims, which could ultimately get onto Germany's balance sheet.
And Lena, another very thorny issue, one that the Germans have been on the one side of and perhaps the rest of the Eurozone on the other, has been the notion of austerity versus stimulus, Germany being a big advocate of austerity measures. But what do you think is the right recipe? Should there be less austerity and more stimulus?
Well, this is a great question. It's really a question, I think, between growth now and growth tomorrow. Can a government afford to implement some more debt-funded spending in order to prop up GDP growth over the next 2, 3, 4 quarters? Or does the government risk allowing a runaway growth in its public debt to GDP ratio, which creates expectations for higher taxes and higher borrowing costs in future, thus stalling growth? So it is really, in its essence, an argument about achieving macroeconomic stability. In the context of the Eurozone, this has really taken the form of a debate on top of signs of growing fatigue with reforms, with structural reforms across the Eurozone's periphery. And that is very much born out of the fact that the stabilization programs, the austerity-clad conditional bailout programs extended by the EU, the IMF and the European Central Bank have so far failed to stabilize these countries. They failed on the 3 major parameters that one can measure stabilization. They failed to get these economies onto a steady, sustainable growth footing. They failed to achieve debt sustainability, and they failed to allow countries like Portugal to really get back and stand on their own feet in capital markets, funding themselves without the help of the ECB.
That's right. And indeed, Portugal is a big destabilizer, with the opposition Socialist Party demanding a renegotiation of the bailout fund. We're going to have to leave it there. Thank you so much to Lena.